In this presentation, we will take a look at closing entries within our not-for-profit practice problem within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice problem. We currently have the open windows open. You can open the open windows by going to the View dropdown and selecting the Open Windows list. We're now going to take a look at Excel to see what our objective will be. You'll recall from prior presentations that we have been entering information into our worksheet. We started off with the Excel sheet up top, or the trial balance up top. We then entered our information, had the adjusted trial balance over here. We then made some adjusting entries in order to adjust the expenses from by nature to by function in the second trial balance. Now we're going to be taking a look at the third trial balance. What we're doing here is taking these adjusted entries in the second trial balance. Those are going to be our beginning balance now in the last trial balance. So we're down here in cell Q82. Q82, these are our beginning numbers. We're going to do that closing entry, which will be very similar to the closing entry process for a for-profit type of organization. That means all the temporary accounts, all the ones that are going to be below what would be the equity section, in this case the net assets, then are going to be closed out to zero, closed out to the equity section, or in this case the net assets section. Now the only added thing that we need to do here in the not-for-profit, which is a bit confusing, is we got to break this out not just between one account. If it was say a sole proprietorship, we'd have one equity account called capital account for the owner or something like that. If it was a partnership, we'd have multiple capital accounts to close out to, which can be a bit confusing. If it was a corporation, we'd close it out to typically retained earnings, which would be there. In the not-for-profit, we're going to have to close it out, and we're going to have to determine whether we close it out to the net assets without restrictions or those with restrictions. This is going to be important because when people are, taking our financial statements, they're going to look at the balance sheet. They're going to see assets minus liabilities as the net assets, and whatever they're going to try to start spending that money in essence. The net assets that are there. So we have to tell them the ones that are restricted, that those are restricted, and you can't really spend those in whatever fashion you want because those are the restricted ones. The ones that are unrestricted, we want those out there. So I'm going to show this in Excel real quick, and then we'll see what QuickBooks does for us. It does a lot of the work for us, and then what it doesn't do for us. What QuickBooks will not do for us is the allocation to the proper accounts. What it will do for us is basically automatically do the closing entry to a account, which will then have to reallocate to the proper accounts. So if we go back up top, what we're doing, I'm just going to show these entries. We're not going to go in detail. You can spend more time with this Excel file if you would like, but just to get an idea is what we're doing here. We're going to close out all the accounts basically that are below the retained or the equity section. So in other words, this number is coming from here. It's going to point to all of them. So we picked up those numbers here. That's part of our journal entry, and then we closed them out with the journal entries to zero. So we zeroed them out. And if we keep on going down on this side, we're going to say that these are the credits. And once again, we posted these down here. And all we're doing is doing whatever we need to do to make these go down to zero. And then the difference, because we closed out first, this first journal entry has to do with the net assets without restrictions. This then got closed out to the net assets without restrictions up top. So we zeroed them out, closed it out to net assets without restrictions. Then what we did, I'm going to make this blue. We'll make the second one green, like so, because that's the one we're looking at now. That's the one we're on. And we're going to say that that one then closes out the ones with restrictions, or some of them with restrictions. And so we closed this one out, the income with restrictions, and it closed out up here to the net assets with donor restrictions. So again, bottom line goal, making all these zero, closing them out to their proper net asset account. So then I'm going to ungreen this one, making it ungreened, and we're going to green this one. This one's going to be greened. So there's that. And then we did that to this one. Same kind of concept. We're closing out all these accounts and closing them out to the related net asset account. So we closed out this one down here, the net assets released for satisfaction without restriction. Therefore, then it being closed out up top to the one without restriction. And then finally, we did that once again down here, closing out. So I'm going to make this green. I won't ungreen the other one because I'm getting lazy on it. I'm just going to remove these and we'll point these out. That's going there, there, and there. So now we're closing this item out and we're closing it out to the proper net assets, and we broke out even the net assets that are restricted between the programs and the endowments. So now bottom line, all of the items that are temporary are now zero in our post-closing trial balance, just as we would with a for-profit type of organization. They've been closed out to what would be the equity section here, the net assets section, but closed out to the proper net asset account in accordance with the restriction and type of restriction. So QuickBooks, let's take a look at QuickBooks, is going to do a similar process for us. It's really going to help us out because it'll do those journal entries for us. It'll close them out. However, it'll close them out to one account, and we're going to have to then reallocate it and think about, okay, well, how are we going to reallocate it? Do I need to do this Excel worksheet to reallocate it? No, we're going to use the job cost sheet to help us to know the amount that should be restricted and the amount that should not be restricted. So let's take a look at that. We're going to go then to the QuickBooks file. So here is QuickBooks. And the first report we want to take a look at will be the balance sheet. So we're going to go to the reports up top. We're going to go to the company and financial and scroll on down to the balance sheet standard. Balance sheet standard, changing the dates up top to 12/31/20. And then we're going to customize the report. So we'll customize the report. We're going to go to the fonts and numbers, change the font size. We want to make it 11. We're going to say OK, and then yes, please, and then OK. And then if we scroll down, we're concentrating on this equity section down here. In the equity section, you'll note that we have the permanent restricted, the temporary, and the unrestricted, but then we have the net income. That's unusual. We don't typically see that in a for-profit or not-for-profit. We see it in QuickBooks, however, because QuickBooks is trying to tell us, hey, look, this report is tied into the profit and loss report or income statement report. This is the amount of the number that you will see on that report. Helpful, but also kind of a problem for us here because I don't want to see the net income. I want to see it broken out to the proper accounts in the equity section. So that's going to cause us kind of a problem here. First, let's see how it helps us. Let's see how it ties into the profit and loss report. We're going to go to the reports drop down. We're going to go to the company and financial. We'll take a look at the profit and loss. Let's take a look at the profit and loss by class. And we'll change the dates up top from 01/01/20 to 12/31/20. Changing the customized report field up top for the numbers. Go to the fonts and numbers. We want to change the font and we want to make it 11. Okay. Yes, please, and okay. All right, so here we have that. If we go all the way to the right on this report, we're going to get our bottom. Well, let's minimize this and then we'll have it. So then we have the 1465 down here. 1465, that's the net loss in this case. If we go back to the balance sheet, that's the 1465 on the net loss. Okay, so the next thing we need to take a look at is well, how are we going to roll that over? QuickBooks does it for us automatically. We saw the closing entries in Excel. QuickBooks will just do it for us. However, it'll only go to one of these accounts, and typically the one we'll assign to it is the unrestricted net assets. So how can we see this? We can go to the first day of the next year. So I'm going to say plus. Now I'm on January 1st. And if I refresh this, you'll see this roll over, and then we'll see it roll over into the unrestricted net assets. So that's what we want to happen. However, again, it rolled over into that one account. We need the breakout. We know what the breakout should be. It should look like this. This is kind of what we think the ending numbers should be. But we don't want to know that. We don't want to have to do this Excel sheet in order to figure that out. How can we figure that out? What this equity balances should be, which are the net asset balances. We're going to use our job sheet to do that. So now we're going to run the profit and loss by job. We're going to go to the reports drop down. We're going to go to the company and financial. We're going to then take a look at the profit and loss by job. And then I'm going to change the dates up top from 01/01/20 to 12/31/20. We're going to customize the report up top. We're going to go to the fonts and the numbers. We're going to change the font size. We're going to make it number 11. We'll say then okay, yes please, and okay. So there we have that. And now we're looking at our jobs. These are the 3 items here, or the 2 items that we have. Now we want to run this from the beginning of time. Now this is the 2nd year of operation. So this is only for, this will tie in other words, this 2497 will tie in if I go to the profit and loss by class to the 2497. However, I want it to have all the open jobs, not just for this time period, but from all open jobs that have activity in it. Therefore, I have to go back to basically all, the beginning of all open jobs. So in this case, it's only back to 2019. And so now we have the activity for all activity for the 2-year time period that we have entered into the system. So now we have the breakout of the 14,447 and the 3388. That gives us the total of the 17,835. So these are going to be the ones that need to be restricted. And we're going to break them out into more detail about them individually being restricted. We have the jobs here for the education. And again, the jobs is the thing that we're using, the tool we're using to track the restricted items for the education program and then the endowment. So the 14,447 and the 3388 tie in here, right? There's the 14,447 and the 3388. So that's how we would basically get it within QuickBooks. Then we need to adjust the balance sheet. If I go back to the balance sheet, we need to do an adjusting entry, and we want to make the restricted items, these two items, match up to those numbers, and then the difference will be going into the unrestricted. So let's do a little Excel worksheet so we can see what we need to do here. If we want the permanent restricted, the perm restricted, I'm going to pull this over to the right, and then I'm going to say that we have currently here the 5887, and then we have the temp restricted, which is going to be the 14445. That's what it is. And then what we want it to be, if we go back to our report for the profit and loss by job and go back to our Excel sheet, what we want it to be for the permanent restriction is to be this 3388, and then we want the temporary to be the 14447. So the difference between those two is going to be our entry that we need. So this is going to equal this minus this. That's going to be the adjustment that we'll have. We're going to do that with a journal entry. So if we go to the company up top, we're going to then go to the make journal entry, and then we'll say this is at the end. I'm going to say at the end of the month. It would be at the end of the year here, but we're going to say this is going to be the permanent restricted. The permanent restricted is at the 5887. We need it to be the 3388, so it's got to go down. It's a credit balance account, so we're going to debit it to make it go down by the 2499. So we're going to put in the debit side, this is going to be the 2499. And then on the other side, we're going to say that we have the temporary restricted, and it's going to have a credit of just 2. And then the difference is going to go into the unrestricted. So the unrestricted net assets is going to be the difference of that 2497. So let's see, we'll record this and see if it does what we would expect it to do, see if it lines up our equity in the balance sheet to the job cost sheet. So we're going to say save and close, and yes, and okay, and yes, because we're dealing with equity accounts, so it gives us some of those items saying, hey, you're posting to an equity account. We have then here the 14447 and the temporary restricted. The permanent restricted is the 3388. So if we go back to the job report, we've got the 14447 and the temporary restriction is the 3388. So that looks good. And then if I go back to the balance sheet, and if we were to compare this to our Excel sheet, we've got let's see, this Excel sheet, we've got the 10,163 in the without restrictions. So if I go back to QuickBooks, we got the 10,163, the 14447 for the restrictions for the programs, those are temporary, and then the 3388 for the permanent restriction. So that looks good. So again, what we're going to do here is tie this out. You want to tie that out to the job cost sheet, and so QuickBooks will help you. It'll roll everything out. But then we need to reallocate to the proper equity account. As we do that, then when people look at it, they can then say, okay, this is the net assets. This equals assets minus liabilities. They're going to try to spend that money or allocate it somewhere. And then we want to say what the restrictions are on it so that they can then properly plan for what they would like to do in the future.